Hey there, this is Alvin, the CEO of Dr. Wealth. You might have heard that Biden is projected to win the US election. And at the time of recording, we have not known who is the ultimate winner, right? But seems like most people have agreed that Biden is the winner in this case. And we want to find out what kind of stocks would benefit or lose out in the Biden term for the next 4 years. And let's begin. So disclaimers as usual, right? Please just read through, pause the video, and if you need to see in more detail. Okay, I'll carry on. And the results are shown that Biden is leading at 290 at the time of recording. There are still two states that have yet to conclude the count. But it seems like the world leaders have already congratulated Biden. And let's look at what are some of his campaign ideas and how is he going to execute the plan for the next 4 years. So he made certain comments such as, we will lead not only by the example of our power, but by the power of our example, as well as make America respected around the world again. So it seems like the US is going out into the world to be a world leader again, right? And that was a 180-degree turn from what Trump's policy was, right? America first, adopting a very protectionist policy and being hostile to every other country, including the allies. But Biden is a lot more friendlier. So his foreign policy, we should see a lot more involvement with other parties, with other countries, especially in certain areas like climate change, which I believe so, right? Which we'll cover a bit more on that later. Okay, so I believe the US allies and emerging markets may benefit as a result of a friendlier and outgoing America again. We all have known that, you know, since 2008 financial crisis, the world stock market has been pretty much desynced. Only that we have seen the real bull run has happened in the US, right, since 10 years ago. Okay, so this is the returns of the past 10 years of the major stock indices from the various countries. So US have gone 178% in the last 10 years, whereas China is about 64% and Europe is 8%. So the disparity has enlarged over the years. And of course, we cannot just attribute that to Trump being a protectionist in this measure, but also the technology advancement in the US, the tech stocks have really drive the stock market value in the past 10 years. Okay, but I do believe that with a friendlier approach to the rest of the world, that may bring the gap closer, right? Going forward, probably the gap between US and the rest of the world stock market will close up as the other countries can benefit as well with all the friendlier ties, with more trade that's going on, with a lot more developments together, right? So I do believe that there can be a chance that emerging markets may see a better 4 years ahead compared to the last 10 years. And of course, China will be a very major player in the world stage. And the US-China relationship is always a very watched area. And I believe that the hostile policies against China that Trump has drummed up over the years are unlikely to be withdrawn totally. Okay, even if it's lesser in intensity, but I don't think some of the policy, some of the trade tariffs will just be gone overnight, right? So I don't think so. I think they will still be in place. And just that also Biden will be more measured in his approach towards China, not like Trump, who will be very Twitter happy and just write anything on it without really clearing PR stands and things like this, right? So Biden is probably a more skilled and measured politician as compared to Trump. In this aspect, I do believe that the technological and market access will likely be restricted for the Chinese companies. So Huawei, as well as its suppliers, will continue to have a tough time, right? They will not see that they will easily sell their products to US as well as the allies. all right, as well as SMIC, which is a semiconductor manufacturing company in China, is currently not being able to buy a lot of the top-end semiconductor manufacturing equipment. So companies like these will continue to suffer, and TikTok as well, right? Managed to get a good following in US, but Trump just make it a lot more difficult now for them to operate in US. Okay, so I do think that even when Biden take over the seat, this technological and market access will continue to be restricted for Chinese companies. And we have seen the impact, for example, like Huawei, with all the trade wars ongoing. In the latest quarter, we can see that Huawei's, which is the red line, right? Their handset shipment has actually dipped. And that has resulted consumers moving to like Samsung as well as Xiaomi. So these two are the beneficiary, right, from this trade war. So Huawei's loss is Samsung's and Xiaomi's gain, at least from what we have seen in Q3 2020. So Xiaomi probably will continue to do well, right? As of 10 November, right, their share price has gained 128% since the start of 2020, right? So that's a fantastic return for a short period of time. And I believe that Xiaomi can continue to do well, right, at the demise of Huawei. And if the bans are not extended to Xiaomi, okay, so there's a big if, which is possible as well, right? The hawkish stance towards China may continue during Biden's term, right? Just that I don't think he will go all out, and especially in the near term, okay. But this remains a possibility, okay. We mentioned about SMIC a little just now, right? So the equipment, top-end equipment for semiconductor manufacturing was not sold to SMIC. So SMIC has to source it from the second-hand market, or even rely on China to really internally develop its technology. But it's going to take many years, all right? And especially, actually, the share price, if you look at their performance this year, it wasn't that bad. We were 100% year-to-date return. Just that we have to note, we have to be aware that there was a listing in China, right, in the A-share market, right, A-share equivalent of SMIC. So that actually drum up a lot of the interest from the retail investor. So I would see that the increase in the share price was more of a speculative nature rather than real fundamental that's driving it. Okay, so I do believe that SMIC performance may continue to be muted unless the research and development for semiconductor equipment can accelerate so much that they see results in the near term, which I highly doubt so. Okay. And Biden would probably be more interested in the human rights issue as compared to the commercial terms with China, right? While Trump was a lot more concerned about the trade deficit, but I believe Biden would bang more on the human rights issues that are happening in China, areas like Xinjiang, Tibet, and even Hong Kong. Okay, may have a lot more criticism from the Biden administration. Right, and that means that it's bad for stocks with just Hong Kong exposure, right? Especially the stocks that are listed in Hong Kong. Many of them only have a majority of their revenue derived from Hong Kong. If such protests and riots continue post-COVID, okay, businesses will find it very hard to operate. All right, even if a vaccine is found, people go back to work and tourists are allowed to go to Hong Kong. If the protests intensify, that will actually bring down the productivity and discourage travelers from going to Hong Kong to tour. Okay, so I do think that the stance from the US may not be good unless Hong Kong issues on these demonstrations can go away, right? Which I also highly doubt so. Okay, just that we don't see it now due to COVID-19 is still rife in all parts of the world. So when a vaccine is found and people are vaccinated, we may see the protesters roam the streets again. And places where they use a lot of security surveillance, right? Like your Xinjiang area, there are prominent security cameras company like Hikvision and Dahua. These are the two probably the largest security cameras company in the world, right? And which means with all this embargo, with all this blacklisting of these companies, US allies may not buy products from them as well, right? So that would also cause their revenue and their profits to have some headwinds in the next few years. Okay, and if Biden is a lot more edgy about all these human rights issue, they may press it further, right? And that would cause even lower sales for these companies in US as well as the US allies, right? This there are always a good thing that comes out of it, and one of it will be Hong Kong Stock Exchange, right? And we have already seen that a lot of Chinese companies have beginning to list in Hong Kong instead of the US. Traditionally, the large successful Chinese companies would always prefer to list in the US because they get a much more international investor base, right? Probably the largest investor base you can ever get compared to the rest of the world. The only issue now, because of all the trade war and all the unfriendly stances against China, right, by the US. So a lot of the Chinese companies will start to think, right, what if I will be forced to delist one day from the US? Might as well I just list directly on Hong Kong, which is becoming more and more of an international financial hub for investors, okay, and people are warming up to it. So like the recent failed and financial IPO, right? We was supposed to be listing in both Hong Kong and Shanghai, right? It was the biggest IPO in history, right? And that includes the US IPO history as well. So it was a big moment for Hong Kong, but too bad it didn't happen, right? But I do believe that in the next few years, we should see more Chinese companies deciding to list on Hong Kong, and that could mean more revenue for Hong Kong Exchange. And as of this year, Hong Kong Exchange have already gone up 52%, right, from the start of the year. So it's again very good performances. And we all know that Biden is very, very interested in climate change, right? Again, this is a very opposite direction of what Trump was all about, right? Trump pulled out from almost all the climate talks, all the climate arrangements, right? And I believe that Biden would go back on it and, in fact, accelerate the adoption of all these climate change policies. He already voiced out some of the plans or some of the goals and objectives, like net zero greenhouse gas emissions by 2050, and has devoted or committed more than $1 trillion into clean energy and jobs. And there would likely also be restriction in the energy market, especially the fossil fuels, and that includes the shale production as well. So that means that it's generally good for clean energy companies like solar and wind, and it will be mixed for oil and gas and coal, right? I say mixed, there's a reason behind which I'll explain in the next few slides. And let's look at some of the ETF that represent clean energy, like Invesco Solar ETF. Okay, so it's up 141% alone this year. Okay, and this is a portfolio of stocks. It's not just a stock. So it's quite phenomenal to see ETF can go up 141% in less than a year. All right, so that run has already been begun. I'm not sure how much of the optimism in Biden's administration with regards to clean energy has been priced into this ETF, right? I probably think there's a good part of it has already been in, right? But who knows? Okay, there's still 4 years to go, a long time, and there might be more room for the upside too. This is one of the solar stocks that did really well, right? Alone itself has gone up 348% within a year. Okay, so it makes a lot of solar panels that are that can be installed onto the roofs of a lot of US homes. And they also sell like control systems as a whole integrated, probably a turnkey solution, right? Makes it easier for people to really adopt clean energy without having a trouble to arrange different suppliers or contractors to fix it up, right? So that's Enphase. And another ETF, this time is WIN, First Trust Global Wind Energy, okay, with the ticker FAN, right? Quite cute. And the performance is not bad as well, up 34% this year, right? Just not as good as the solar. But we should expect some of this clean energy to benefit further in the Biden's administration. So if you are someone who are looking in this area, these are some ideas that you can look at. Okay, and as I said, it's mixed for the oil and gas industry. Like for example, ExxonMobil, which is probably the most representative oil and gas company in the world. There are a lot of other oil and gas companies, right? But of course, this is the most iconic, in my opinion. And there will be restrictions on them, which means the supply may be curtailed. But when supply is curtailed, actually the oil prices will go up. And if the vaccine has been administered to most people around the world, travel may come back, and that would consume more oil. All right, with lower supply of oil and higher demand, right? Oil prices may shoot up actually, which may not be a bad thing for ExxonMobil. Although more restriction on oil and gas producer may also mean probably higher taxes or even higher cost of operations. All right, that means they can thin the profit margin. So the outcome is still quite unclear. All right, for oil and gas companies, okay, it's a little bit of mixed signal, right? They should benefit from higher oil prices, which seems imminent, but at the same time, with all the higher cost of operation, that may thin their margins. Okay, as of year to date, the ExxonMobil share price is 47% down for the year, and in fact, it's actually back to where COVID-19 period was, right? It's actually like a double bottom. Only recently, when the Pfizer and BioNTech announced the vaccine efficacy, right, it jumped up quite a fair bit, 10 over percent in one day. But going forward, we're not sure, right? The signal is still very mixed, okay, for the oil and gas, but definitely is not as gloomy as it was before. Coal, China is a major user of coal, right? Because a lot of the electricity are still powered by coal energy, and China Shenhua Energy is one of the largest company that deals with coal. And coal demand can be affected if China goes greener, right? Which is actually the plan. But with US now, with Biden administration stepping on the pedal towards climate change policies, that could also spur China to accelerate it as well, right? That they may decommission more coal power station and rely on more clean energy in the next 4 years, right? And with that, then some of these dirty energy companies may see lower earnings, lower revenue, and that would affect their share prices as well. The last thing that I want to talk about would be the higher cost for US companies to operate. Okay, because Biden has said that he wants to raise he supported the raising of federal minimum hourly wage from $7.20 to $15. Okay, that's more than double of the current rate of $7.20, right? And that would mean higher staff costs for a lot of the US companies if they employ a big number of hourly wage staff, right? And Biden also wants to raise the corporate tax from 21% to 28%. Okay, so that would affect profitable companies, right? And what I can think of, these trends would impact those companies that rely on cheap labor, right? Especially the retail and F&B, which hires a lot of hourly wage staff, and it will be back for companies with high profit margin, and usually they're the tech stocks, okay, because of almost near zero marginal cost. After they hit the critical mass, they can actually enjoy very high profit margins, and that means that they need to pay higher taxes under the Biden administration. Examples, what I can think of would be Starbucks. Okay, like according to PayScale, Starbucks pays as low as $9 for some roles. Okay, it's a range, and sometimes it can be around 15, which is the new minimum wage if it succeeds. Okay, and if Starbucks is forced to pay everybody minimally $15, okay, that would mean that the cost of operations for Starbucks will go up and the margin will thin. right? And as of this year, their performance is up 9%. Okay, it's decent, right? Considering that the COVID-19 has happened in 2020, right? And they still are able to edge a positive return this year so far. It's quite commendable, right? But going forward, it seems like the cost of operations may increase, margins may decrease. And companies like Apple are known for their profitability, right? Their fat profit margins, because they charge a premium for their products because of the branding and the designs and experience that they sell. They were able to command a much higher price than their competitors. And that means a fatter profit margin in their income statement. But if they have to pay higher taxes, right, then their profit margin will be thin as well. Of course, companies may use other tax management strategies to minimize the tax that's required to pay. But nonetheless, I believe that their margin will be thinned, in the next coming years. Right, so profitability wise, it's just I believe it will be a slight decrease, right? But it's not like they're going to give up all the margins to the government, okay, which is not the point as well, right? Because the US government also want a lot of all these big name big name companies to do well internationally, right, and continue to push US as the #1 leader in the world. And Apple still did well, right, with 58% gain in 2020 alone. Last but not least, I think that regardless whether Biden or Trump win the election, okay, the Federal Reserve has pumped a lot of liquidity in the market, okay, in the Main Street as well as the Wall Street, okay. Remember during 2008 financial crisis, that was where the Federal Reserve started to adopt very loose monetary policy. They started printing a lot of money, right? So there was a jump, but that increase was nothing compared to the COVID-19 response, right? You can see a much steeper and higher jump in the liquidity, and it has not really come down for the last 12 years, right? So they are talking about 7 trillions worth of assets that the Federal Reserve is holding in their balance sheet. Nobody knows what's the consequences, right? But it seems like it has been working so far. Every time the liquidity floods the market, the share prices rose up. Okay, and this could be one of the reasons why. Remember the earlier part of this presentation, we talked about the US indices doing a lot better than the rest of the world, right? It could also partly be because of this massive liquidity that has been pumped into the monetary system, as well as the stock market over the last 12 years. Okay. So in conclusion, right, I do think that US will have now warmer foreign relations, right? US is going out to the world, embracing the world, leading the world, and be firm on certain matters rather than just taking care of their own benefits and just ignoring the rest of the world and even the allies, right? Those days are over once Biden is taking the POTUS seat. And US-China tension will remain, okay? Just that the stance will be a lot more moderate, right? Not as antagonistic as what Trump has always been treating China. Climate change is a key thrust, and that would mean some of the solar and the wind companies to benefit a lot more compared to the oil and gas industry. And lastly, I do believe that the stocks will continue to be bullish, right? Of course, it's not a one straight line for the next 4 years. During Biden's term, there will be ups and downs, there will be corrections, but in general, I think that the stock market will end higher than where we are today, right, in 4 years' time. Okay, largely because the liquidity are still in the market and it has not withdrawn that from then. And vaccine would also be administered, right? And the problem would probably be put behind us in pretty 1 year or 2 years time, right? And I do believe that it's important to stay invested. Okay, so that's the end of this sharing. I hope it has been useful. If it is, can just subscribe to our channel, right? We're going to make more of this, but we probably need more feedback, right? Whether do you find this useful? So we can also alter the content, right? If you like it, we do more. If you don't, we have to change something that is a lot more palatable for you, right? Thanks for watching, and I'll catch you the next time. Cheers.